Hi, it's George Nordhausen. Welcome to Monday Morning. Our topic today is really challenging, changing carrier landscape, the data, the artificial intelligence that's taking place that we all have to know. Very few people in the country really have a feeling of this, I think. At least I haven't seen very many. But I know that Bruce Cochrane does. Bruce is the head of Renaissance Alliance Insurance Services. Let me show you his picture here. There's his background. You know, he's been one of the top speakers for us all along ever since we've been doing this. He started his agency, and he ran his agency, began to build the biggest and probably the most well-known aggregator in the Northeast, and he's in the Wellesley Hills area there at Wellesley area there in Massachusetts. But he's very, very active. He started captive companies, all kinds of risk alternatives. He's very big in workers' compensation in the state of Massachusetts. He was president of the Mass Association and all these things that he has been doing, but he's written story after story and spoken, and I mean articles for magazines. At any rate, he's the guy that I think probably has the best handle on really where this world is going of insurance in the years to come. So Bruce, that's my background for you. You tell us what you were talking about here.
So thanks, George. Great to be with you this morning. Basically, what we want to do today is talk about some of the huge changes that are going to take place, and specifically at the carrier level as it relates to technology and it relates to products going forward, challenges. We're going to talk about also how technology and data together represent the two forces that are going to create the most change, and many, of course, talk in terms of disruption. And that's, of course, a word that we've been using quite a bit lately. We agents are going to feel that, but carriers are going to feel it probably more than anybody in our industry. So I just want to walk everybody through this, and then at the end I want to have a little discussion about artificial intelligence and what role that will play going forward. And is all these things, it's sort of like all these changes are sort of like the evolution of the driverless car. Sure, it's going to take probably 25 years for true driverless cars to really become mainstream in this country. But what you're going to see is over that period of time, the gradual changes, the introductions of crash avoidance technology into all the cars. I have it in my new 2016 vehicle. Amazing the kinds of things it can do to keep me safe. And so we're going to see these kinds of changes take place over a period of time and eventually winding up with the true driverless car. So that's the same thing I'm talking about here in terms of the changing carrier landscape, but a great deal that's going to be driven by technology and data. So let's talk about changing carrier landscape.
All right.
What I see is challenges for carriers are pretty straightforward, and everybody's feeling it. I feel the Achilles heels for the carriers right now, the major carriers, are their legacy systems. These are systems were built many, many years ago, in some cases decades ago, and along the way, new technology has evolved that enables new entrants into the business with a great deal of alacrity. They don't have any legacy to deal with in the background, so they can come in and put together systems that can get them up and running in a marketplace lickety-split, and they can also change on a dime. So it's that be able to move with alacrity which gives these newer players a great deal of influence going forward, and our carriers really have to be able to evolve their legacy systems to be able to address that.
Are they aware of this?
Well, of course
they know they need to do it.
Oh yeah,
What?
I talk to them all the time about this. But here's the problem. So you've got a major carrier that has a huge systems infrastructure, and it's built upon layer of systems tied together and so forth. And so now, if you want to make the change to that, major change to that, to the whole new technology platform, it's really sort of like trying to change a tire at 60 miles an hour. Imagine trying to change your tire in your car going 60 miles an hour. Because carriers have to continue operating, they have to continue to process, they continue to do everything they do in the background relative to their systems. and it's very difficult to do, to change in the middle of operational. And the carriers, most carriers don't have the kind of capital sitting around that would require them to be able to spend and changing the entire systems. Again, this is going to happen over time, but I think many of the carriers recognize this, and they understand that this is the kind of thing that could cause them a great deal of disruption. Let's talk about what I call the marketing placing insanity. We've dealt with this ever since agents and carriers have put in the face of this world, so to speak. Carriers have a very difficult time in being able to articulate their underwriting appetite. So a carrier comes in, you say, okay, what do you want to write? Well, we'll write, all kinds of things. We're pretty general, but don't you want to write? Well, you don't really get a true picture. And those that say they want to write certain things, they're always bending over here and bending over there. So for instance, I'll give you an example. We have a carrier that actually takes all the NICS codes and breaks it and affixes a color code to them, green, yellow, and red. So green is full open. We want to write these risks every day of the week. Yellow is we want to write them, but we need to have discussion about them. Red is we don't want to write them. Okay, so we have this conversation quite regularly with all of our carriers because we have a unique ability to be able to make sure that every single market is touched when one of our agents wants to go to market with a risk. And so as a result, we have a low hit ratio with many of our carriers. Still quite a bit of volume they're writing, but still a low hit ratio. And so a carrier would typically come in and say, Bruce, you're sending us too many of these risks that are reds, and therefore our efficiency ratio is down. And so I say, fine. Tell you what, all these reds that you don't want me to send you, I won't send them to you as long as you guarantee me you won't write one of those risks for another agent. And the answer I typically get is, well,
keep sending them, yeah, right.
Get to that. I mean, this is the problem we have, and so we agents are in the business, when you really come down to think of it, of throwing against the wall, seeing if it sticks. And we don't know. Most agents make assumptions, which is bad. You don't have enough manpower to be able to hit every single one of your carriers, every single one of the risks you bring to the door. So you make assumptions based upon, say, I sent this kind of a risk to a carrier 6 months ago and they declined it, or they outpriced themselves, so I'm not going to send it to that carrier. So you go down the line and you wind up sending it maybe 2 of the 6 carriers that you have, and then what happens is you lose the business to another agent using one of the carriers you didn't send it to. So that's a mortal sin for agents when it comes to marketing and placing, particularly in commercial lines.
Let me ask a question. How many markets, how many carriers does Renaissance represent?
Well, altogether, we have standard markets around 40 carriers. I mean,
40. Okay, so
we have some core carriers that we use quite often, most of the time, but we represent about 40 carriers, standard market carriers.
And you are submitting the business for your agents to those carriers.
Right. But even if you represent 5 or 6 carriers, this dilemma is staring you in the face. But think of all the wasted resources between the carrier going through all these motions, declining or not writing risks and so forth, low hit ratios, and on the agency side, it's insanity. It's crazy. And believe me, there are players looking over the fence, non-insurance players, but looking over the fence, looking at what's going on in here, saying, this is nuts. I mean, there's a huge waste of resources going on here. And now I've got a few ideas about how to deal with that going forward. Part of it has to do with data. Part of it has to do with matching up the carrier, really matching up the carrier's predictive model with available risks out in the marketplace. But that's going to take some time to evolve, but I think that's part of the answer. I think another answer might be what I refer to as portfolio underwriting. So if I've got a large book of business that has averaged a 33% loss ratio over the past 10 years, okay, any carrier comes in taking whatever number of risks they want to take, they're bound to wind up with a loss ratio somewhat near that or even better. So, I mean, instead of underwriting risks risk by risk, if they underwrote by agency, with monitoring, I think that would get us out of this hole. Okay, so and that's something that carriers are faced with, but it's one of the things that are tying us all in knots that make it possible for other players from outside of the industry to come in and bite us at our heels, so to speak.
Okay.
And I think part of the issue is the carriers are wedded to what I call the top-down model. In other words, our carriers are the ones who produce the products that they want to write and they want to underwrite, and then we as agents scramble to see if we can match up what they want to write with what our prospects are out in the field. I think you're going to see, and we'll talk about this later on, we're going to see a sea change in this going forward, where the consumer is going to begin to have more and more say in how these things operate. And I think that probably the biggest challenge that carriers have, some carriers have, not all, there are many that understand what's going on here, but there are a number of carriers out there who just are complacent. I mean, we're going to survive because we've been around for 150 years. That is insanity. That's insanity. So again, carriers have a great deal of challenges inherently. Many of them are working on them. I talk to the carriers about this quite frequently. So going forward, I think what we're going to see is a proliferation of underwriting entities. I think what we're going to find is that we're going to find non-insurance entrepreneurs coming into the business. They're highly funded, well-heeled, great technology, and they're going to begin to drop down to the retail level. I think along with this, you're going to see a proliferation of the MGA model back again. You're going to see a number of players drop down, reinsurers drop down to the retail level. These reinsurers want to penetrate that retail space and essentially bypassing the retail carriers. And they're going to come in with new technology. And I think this ties back to the first issue of carrier challenges on technology, is that what happens. They're
not hurt with the legacy systems. They didn't got them.
Yeah,
so they can start from scratch.
If somebody at the carrier has an idea, it goes to a committee. They jawbone it for 6 months, and then if it gets through that, it gets put into an ITQ, and then somewhere 2.5 years later, they come out with a product, right? Now I'm overgeneralizing, but that's basically the way it works.
Right.
But with this new technology, these players can come in and go from ideation to implementation in weeks or months instead of years, and that's going to make a big difference. So that's why the technology piece is so important. And so the next thing I think you're going to find is you're going to see a lot of new insurance products. I talk a lot about how we in insurance are really protecting against life's contingencies, and that's the definition to a great extent of the pure risk. But I think we're going to see going forward a lot of micro risks, meaning small slivers of risk that aren't insured right now. So there are plenty of things in life that get in our way. You can walk down the street and within a half an hour you can identify a dozen things that aren't right now covered by insurance. But I think technology and the kind of techniques that are going to be used going forward, particularly with business being driven from the bottom up as opposed to the top down, you're going to see a proliferation of a whole new set of insurance products. Now this is good because for basic property casualty agencies, we're going to see a significant drop, particularly in the automobile revenue, as the crash avoidance systems moving to the driverless car continue to evolve. And so this is a way that we'll be able to replenish those revenues.
Lemonade.
Yeah, well, this is an example of what I'm talking about. Lemonade is basically a combination of self-insurance and crowdsourcing. It's basically where someone will come in, a group of people will get together and using social techniques, social media, so on and so forth, and they'll decide that they want to insure a particular thing. I'll give you a good example, and that is, got the wrong one here. That is over in the UK, we observed this 3 or 4 years ago. There's an organization called Bought by Many. You can go online and you can take a look at it. And what this does is this bands together groups of insureds with similar wants, similar risks. So, for instance, the example I like to give is a group of people got together who have what do you call them? Security dogs, or excuse me, the dogs that lead the blind, kind of a thing.
Yeah, right.
The word right now, but so they couldn't find proper coverage for that kind of situation, so they got together and basically created their own insurance mechanism where they agreed on the coverages. The insureds now agreeing on the coverages, they agree on the premium, and they also agree on how the claims will be managed. In this
Guide dogs.
case, claims are managed by the insureds.
Right.
So I guess the thing is, when consumers can make and agree to the rules of how the game is going to be played, you'll watch this kind of thing just take off like a shot. It'll be wildfire. It'll be impossible to stop. So you'll turn insurance in many of these cases from what now is a grudge purchase to a love experience. So, the irony that we have right now is that we tell people we're going to protect them when certain things happen. Then when those things happen, we start fighting them, or at least that's the perception that the consumer has. And so going forward, if you begin doing it from the bottom up, and there'll be a place for carriers in here to be able to provide the risk, the backroom, and so forth, but you'll be able to turn that whole love-hate thing around, whereby these insureds are going to want to insure themselves for these coverages. I think it's a telling transition as we move more into the socialized society. Okay, so moving right along, let's go. Let me talk about Trove. Trove is the recent one. This is a case where insureds. Let me give you its background. Trove started as a mechanism, an online mechanism for people to inventory their valuable belongings, whatever it is, musical instruments, bicycles, golf clubs, you name it. And then they sat there and said, and what they do is they're able to do it very easily. They don't have to do anything with paper. It's all done click, click, click. Take a picture of the invoice, so on and so forth, and made it very slick and very easy to do. So then they started thinking, what can we use this technology for further? And they said, okay, insurance. So what they've done is they created a mechanism by which these insureds who are on the Trove platform can go in and they can click on an individual item, say a set of golf clubs, and say they're going on a trip, and they will insure that individual item for the amount that they want for the length of time that they want. It could be 1 day, 5 days, 5 weeks, whatever. And so this is the kind of change in consumer thinking about how insurance operates. Instead of forcing someone to purchase a policy for a year at a time, you're allowing them to buy it basically like, by the mile or by the gallon kind of a thing.
I think, Bruce, that this whole concept, this whole slide is something I kind of instinctively knew all along, but not really, it's kind of over my head intellectually about a lot of this because I'm not on the firing line, but it's the thing I think that that motivated me. I'm starting Monday Morning Markets, as you know, and that's where we're going to the general agents, wholesalers, and so forth. We call them SMPs, specialty markets providers, and they are going to be on agents' websites. Now, it's going to be a whole different way of working, and with videos and so forth. But the point I'm making here, though, is this: that when I was beginning to think about all these things and see this coming, and then I saw the conning report, and I don't know if you saw that, but the conning report showed that over half of all business now is specialized, just kind of like what you're talking about here. And obviously, some of the big carriers have it specialized too. But you're seeing so many specialists, and the move and the percentage is going up. Many more very pinpointed coverages, like you're just talking about here, are coming along, and a regular carrier just can't do it all. So I think that this what you're saying here is really kind of what motivated me to put this whole thing together, and it's pretty exciting to me because I see this really happening right now, and it's fun. Sorry for interrupting, but it made a good point. I think
it's going to explode, and you're going to have so many things that can be insured and so many opportunities to drive value to our customers. I think that's basically what I'm trying to say here, is that we insurance agencies are here because we create a difference. The difference is we're local, we know the clients, we provide them with personalized advice, we're able to tailor situations to fit their individual needs, and those needs are evolving, and those needs are more than just the auto, the home, the toys, so on and so forth. It's a myriad of things that agents can help them to protect themselves against the big financial ups and downs that are potentially there. Again, it's not just that this is going from the traditional to the more specific, and the reason why we're able to do this is because of technology. We can break things down into much finer, smaller pieces, but be able to use the insurance mechanism of the many paying in for the losses of the few to benefit everybody in these situations. And so
right.
I think it's going to be a great explosion of opportunities, particularly for independent agents. So let me go on to data, because data has a great deal to do with this. We're in a data age. There's no question about that. And I think data is going to be a big player for independent agents. Now, what I'm going to talk about here with data, technology, and particularly get into artificial intelligence, is basically just the concept that rather than to be frightened by these things, and I think many agents are, because most agents are what? Salespeople. They're not data wonks, and they don't. This stuff is kind of fuzzy and foreign to them. But what I'm saying here is that this is going to, those who have this capability are going to have a huge leg up on those who don't. And so it behooves all of us to begin to learn all of these things now, till later on when it becomes a crisis. You've heard me say before, George, that today's age, agents can't, but anybody, business people can't sit around and wait for things to evolve, because evolution has turned into disruption because things are moving so fast. We have to anticipate. And what data does, it gives us all the ability first to anticipate. It also gives us the ability to be able to create better customer experience to our customers, and also helps us to be able to run a lot more efficiently. And competition is going to demand that going forward. So combination of data and artificial intelligence is going to be at front and center some major tools for agents to be able to deliver their value added to customers. So what am I talking about? I'm talking about enrichment of current customer data. We'll know more about our customers than we do now. We'll be able to cross-reference them with their families, relatives, friends, acquaintances, people with whom they're engaged with civic organizations. Think of the networking that can create, and it's all about referrals, right? And it's also about gaining much more intelligence on prospects. And so rather than the hit or miss, you know, what's the old expression, a producer bump mentality of sales, he writes whatever he bumps into. Or you hand the producer a phone book and he starts writing down the phone book calling people. Well, data will give us the ability to be able to focus our salespeople on those things that are going to give us the best reward. I've talked earlier about matching up the carrier underwriting appetites. We call it the predictive model, all those predictors. Well, we can match that up now with insureds in the field that fit that criteria, and think of how much efficient and effective that will become. In addition, we'll be able to go out and sit down with a prospect and already know 80 to 90% of what there is to know about the risk, because it's all available. It's all available in public access. Okay, internet's a great thing. So intelligence on prospects is a huge thing. It'll drive new business and create deeper relationships. I think you'll also be able to generate new program business. So now you'll be able to go into a database and say, okay, what do we actually write in what classes of business? And then we'll try to figure out what is the best profile, most profitable profile of a customer for a particular agent. Now, every agent is different. We all have different strengths. We all have different areas of concentration. So what is the profile, exact profile, the most profitable insured for our agency, and go out and find those risks, as opposed to fooling around with all those fringe risks that are just going to cause us to lose money. I mean, this is talk about account segmentation and all that. That's going to be a big part of it. And all of this comes down to, I mentioned it a little bit earlier about anticipation. You know, we're no longer do we have the ability to be able to sit back and wait for things to evolve. We have to react now. was it Douglas MacArthur said that business as in war, failure in business and in war can be summed up in 2 words: too late. Too late, you lose. Okay, and so we need to be able to anticipate. And how are we going to be able to anticipate? The data will help us understand that. Watching the trends will help us understand that. But we'll be able to do things much more quantitatively going forward to know where to place our resources. So as a result, the hottest skill sets going forward, and by the way, the top 20, no, the top 10 jobs.
Bruce, I lost you there for a minute. What did you say? 20?
Top 10 professions on LinkedIn last year are all having to do with data and data management. And so you're going to have data management skills, data analytics skills, and of course data engineering. Those are 3 very separate and distinct components, but they all work into the same thing. And so I've said to our agents over and over and over again, this is so important that if you can't do it now, and most agents don't have the ability to do this now, hire someone who can. And that means outsourcing, sharing resources with someone else, so on and so forth. I think that's how we're going to be able to gain these kinds of skill sets. But this is so important. This is what is going to give agents the ability to really step out in front of their competition.
Think of the millennials coming in who are going to know all this. They're going to know the system that you and I may not know, and what an opportunity for them. Holy mackerel.
Yeah, well, it does. This discussion doesn't even get on the issue about customizing our delivery of services based upon the needs of the customers. So when we bring in a new customer in, one of the first things we ask them is, how do you like to communicate? Text, email, phone calls, letters, whatever,
right.
Pony Express, whatever. That's just the tip of the iceberg. And so we're going to be able to have the kind of data on our insurers that's going to be able to enhance our delivery of value-added services. That's where I think the great opportunity is. So let's talk a little bit about artificial intelligence. I think people tend to get a little frightened by this. It's so mystifying. But I think artificial intelligence going forward is going to be a tool no more mystifying as the PC is now or the smartphone is now. It's just that we have to get knowledgeable about it, and we need to be able to get access to it. So we're talking about such things as what we call cognitive computing, and this is what I would call digital humanoid robots. So this organization, Trove is one of them. I think another one was Insurify, which is an organization that sprung up here about 6 months ago across the river here in Cambridge, Massachusetts. And basically, what that is, it's a human, artificially intelligent thinking machine, where the machine can have basic conversations with insureds, walk them through a process, identify risks for them, and help put together a program of risk management for them. Now, it's in its rudimentary stages, but this is the kind of thing that's going to open up opportunities for independent agents. I'm not saying it's going to replace the agent, but what it's going to do is allow the agent to be able to focus his or her resources on those things where they can provide value and do it a lot cheaper and do it a lot more effectively.
I mean, well, what you're talking about really is the IBM Watson situation for the insurance industry.
Well, yeah. I mean, I'm going to talk about that in a minute. So let's just hold off on
that.
Right.
But in the meantime, what was the name of that firm again?
It's in
there in Massachusetts.
Yeah, it's in Massachusetts.
What's the name of it again?
Insurify, Insurify, Insurify.
Okay, got to look that one up.
Yeah.
Okay, go ahead.
And I think that's part of where the future is going. But I want to try to finish this so I can give you an idea of what I'm talking about here. So
go ahead, Bruce.
What artificial intelligence does is gives us the ability to evaluate very complex sets of data. Now, I'm not talking about a flat spreadsheet, even if you have 1,000 records. I'm talking about millions and sometimes billions of bits of information that we as humans cannot assimilate in our brain, no matter how intelligent we are. And so it's very difficult to figure out the connections, to figure out all of the similarities, the things that bring the data together, and to be able to give you a picture of what's really going on here. So the artificial intelligence is just a way to be able to look at that data almost in an instant and come to conclusions, okay? And we mentioned Watson. Watson is just the first iteration of that. I mean, we're in the staging of artificial intelligence development. I think we're in the first stage right now of a four-part staging. When you get up to the fourth part, it's all about machines that can self-learn. That's very frightening. I won't go there at this point, but there's a whole theory discussion on that. So, we're talking about being able to have what you might call virtual digital agents. In other words, to be able to analyze risk exposures or recommend treatment, be able to allow your higher trained, experienced people to be able to focus on things that they need to focus on, that can bring value to the customer. And it can also help us automate repetitive tasks. I mean, we're doing this now for GreatSword manually. We utilize Resource Pro to outsource a lot of backroom operations, but this, with artificial intelligence, you'll be able to automate a huge series of repetitive tasks and leaving the agent to be able to focus on what he or she does best and bring the most value to the customer. And think of it, this will enable agents to provide very cost-effective 24/7, 365 customer service. Now, we're getting back to that issue of the customer experience. Well, it's very costly to pay for humans to man the phone systems 24 hours a day. Consumers, though, they're up at all hours of the night. They want to go on the computer, on the internet. They want to conduct business. They want to shop, whatever it is. Well, for an insurance agent, they have a person at the end of that line. It's extremely costly. But think of what you'd be able to do if you had some of this artificial intelligence capability. So let's talk about Watson, right? If you take a look at Watson, and of course, remember Watson was the IBM genius that defeated its two former Jeopardy champions.
Oh, that was one. Yeah, we have a whole. I have a Monday morning on it. If you want to know more about Watson, go back to my Monday mornings. And I had the IBM people. Boy, it's fascinating.
That was 3 years ago. And today's terminology, that was light years ago.
Yeah.
That was light years ago. Because Watson itself has evolved to the point where now IBM is renting out, leasing, so to speak, slices of Watson to various industries. I think what you're going to find, and this is an easy trend to look at, that you're going to find this kind of service springing up all over the place, where organizations that have the ability to be able to put together Watson-type capabilities will then be able to lease it out, small segments of it, to even small business people. Now, this may be 5, 10, 15 years down the road, maybe even shorter. But this is the kind of thing I think we're looking at as we move forward.
You know, the last time I interviewed you on something, you said, we were talking about the future of the agencies, and you said something really was neat. There's Bruce. You said something that was very, very neat that I liked. You said that the future of the agency is going to be somewhat, I mean, a lot different. And you said that agents, you use a football analogy and you use a conductor analogy. I think that really applies right here. Don't you? Say it again, what you said, if you remember.
Yeah, it all ties together on this. And I believe that agents should be like a quarterback on the football team or the conductor of an orchestra. And that is, the agent doesn't need to know every single little thing there is to know about every single little product, okay? Now, just as it is right now, auto, home, umbrella, toys, commercial, auto, commercial package, so on and so forth, that may seem like a big array of coverages, but it's a speck of sand on the beach compared to the kinds of insurance-related type risks that are going to be provided for coverage going forward down the road. So in order for the agent to be able to get their arms around that, I think we should operate as the conductor, meaning have at our fingertips, at our beck and call, the resources that can dive down into that, but the conductor doesn't need to know everything. And I think one of the things that get a lot of agents caught up, they feel they have to be expert, a technical
It's a
expert
big change to a guy who's
in
been
this
selling
job.
on a day-after-day basis for the last 30 years. That's going to be tougher than, well, it'll slowly but surely take place, and it won't be too slow, will it?
No,
This is
it'll
fascinating,
happen.
Bruce. I appreciate you doing this. You know, it's intellectual. It's an approach, and everybody's not going to understand it, I'm sure, at first. It's difficult to put your arms around, but you seem to have a pretty good, I mean, a better understanding of it than most. So I think that well, people can talk to you if they want to talk. There's a contact for Bruce. He's very contactable, if I may use that. He's got like, I don't know, 70 employees or something, but I don't know how many agencies in there, but they do over $500 million worth of business, and he understands this situation, so don't feel hesitant. He says, fine, if anybody wants to talk about it, I'm more than willing to. I'm learning a lot on it, Bruce. I've been working on something called insurance needs analysis for quite a while, and that again is pretty much like what you've said here. And we use gradation, and the gradation for your agency, for your customers, knowing which ones really pay off, which ones have the future, and all that. So there's a pretty good example of kind of what you're talking about. That's the thing that I see that is really coming along. But you've opened my eyes on some things right now. I'm for sure going to follow up on these. So listen, thank you.
Just think of it as the tools. They're going to be available tools in the agent's toolbox going forward. That's what these are.
No, it is fun. It's exciting, and I hope that you and I have about another 20 years to go at it. Okay, for the rest of you, again, I'll see you next Monday morning.